Already, welcome back to the channel. This is a special conversation that I'm having with my friend Marc, a fellow Texan. He's a Latino who came from a background that wasn't really exposed to this whole business world, even though his parents were college educated, and that's important. So Marc broke into some of the most gate-kept industries, that is investment banking and private equity, before business school. So he used business school as a launch pad to a search fund, which we will talk about in this discussion. This is Marc's Playbook. Enjoy the conversation, share it with someone special. Don't forget to like.
Big corner office, head of the group, talking with senior partner on the counterparty. Investment banking is client advisory services.
What was like your recruiting journey like at UT to get to Barclays?
They had such a positive influence on my life, my career, and where I am today.
How many interviews did you have to go through? Do you remember that?
I mean, I had a ton of conversations.
Any particular football game you remember that was like your favorite experience?
I started at UT fall 2000.
And how much money were you making during that time? You ever wonder how people end up in money-making careers that run the modern economy? Some people stumble upon these life-changing opportunities, and some people find out when it's too late, if they ever find out, and neither should be the case. So we're putting the careers of the business landscape into perspective, one conversation at a time. Marc, man, welcome to the conversation. Thank you for joining. How are you?
I'm good, man. Thanks for having me, Tyler. It's great to be here.
Good, man. So I just want to give people some context about who you are. Can you sort of explain your background a little bit and then the key elements of your background that make this conversation important from your perspective?
Yeah, sure. So my name is Marc Guerra. I was born and raised in San Antonio, Texas. Grew up in a large, extended Mexican-American family. Family is really important to me. Community is really important to me growing up. And ended up going to UT Austin for undergrad, spent some time in New York City working in finance, worked abroad in Latin America, and then ultimately came to Wharton to get my MBA, which both of us recently graduated from about a week ago.
Yeah, we did, man. Heck of a journey. Did you enjoy business school?
I did.
Yeah,
it was definitely a very transformational experience.
Yeah.
Came here wanting to do a lot of different things. And I feel like I was able to actually make that happen. So we can talk more about that in the coming questions, but it was definitely a great experience.
Yeah, it's interesting because I obviously did my research for the interview. You did a lot of things before business school. So then you came here wanting to do a lot more things. We'll definitely get into that. I sort of want to talk about your journey to UT, right? So during your upbringing, thinking like high school, what turned your eye towards UT, right? Other than if you grew up in Texas, everybody wants to go to UT unless you have family who went to another school. What was your journey to UT like?
Yeah, so I'll be honest. For me, like you nailed it. My family, my mom actually went to UT Austin for undergrad, so grew up in a Longhorn household. Yeah. Always watched Texas football and Texas sports just growing up. And so definitely had an affinity for the university. I, similar to you, was a high school athlete and played football, and at first thought that, I was going to try to do that in college and try to get a scholarship somewhere. Unfortunately, that didn't end up working out, which is great because it led me to UT. And so when I was thinking about university and applying to different colleges, after pivoting from like, okay, let me try to get a football scholarship to, hey, maybe I should focus more on the actual traditional university experience and focus on education and different things of that nature. What attracted me to UT was I think it was far enough away from home, but still close enough. I think there were a lot of different majors within the university that it offered. And I was somebody who didn't really know what I wanted to major in or what I wanted to do going forward. And I thought that was pretty attractive. And then I also wanted a more of a traditional college experience. And I thought that the culture and the traditions at UT were great, as well as it was a good academic experience. And so I applied to some schools in California, applied to some schools in the Midwest, and ultimately got into UT early on and decided that it was going to be a great fit for me. It checked a lot of my boxes. Also coming from San Antonio, I had a good amount of friends that were going to be going to UT as well. And so it just felt like a natural transition to go there.
Okay. Did you have any involvement with any organizations in high school that sort of helped with your college application process?
To be honest, no. I mean, we had counselors, college counselors within our high school that you could go to for guidance and stuff. I think, I mean, we did have support, but there weren't any particular organizations that said you should apply to these schools or you should do XYZ, other than, promoting test prep and I guess trying to get everything in line when it comes to the college application process. And I think there was probably a lot more conversation around the parents at my high school on how to try to help their kids be successful with that process, but nothing that I can really think of right now, 10, 15 years after the fact.
Nice. So at UT, you majored in econ and finance.
Yeah.
How did your experience at UT shape how you viewed business, and did you always want to go into finance?
No, I didn't always want to go into finance. To be honest, I wasn't even really sure what finance was when I went to UT. No one in my family had ever worked in financial services before. And I kind of discovered it serendipitously as I was looking for different majors that I could potentially major in. So I got accepted to UT as a civil engineering major. Growing up, I had always loved playing with Connects, which are like Legos. You build different models and things with those. And so was fascinated with that and thought that somebody, gave me the guidance once that maybe that would translate well into an engineering background. Plus I also was pretty good at math. And so it just kind of made sense. But when I got to UT, realized that, looked at the curriculum and thought that, I don't think this is really where I want to focus my time here. And I wanted to really explore different majors. And I think UT was great in the sense that at the time I was there, I don't know if it's still like this, but they had a pretty open requirement for first year students to kind of take a lot of classes across the university from different colleges. And so they encourage people to explore different majors during their first year, which I really took advantage of. Long story short, in the fall semester of my sophomore year, I ended up taking a financial accounting course, and was really interested in the financial statements, really interested in trying to analyze investments and how you could make money work for you. And that ultimately spurred my interest in wanting to learn more about business overall, wanting to learn more about finance. And from there, ended up getting introduced to some organizations, some mentors that ended up helping me and really springboarded my career to where I am today. So we can talk more about that, but it was more of a exploration process. When I went to UT, when I was exploring different majors, I thought I'd be doing something in history or maybe something in languages. Those are two areas that I'm just interested in, passionate about. But ultimately really got excited about business and finance when I started exploring further and taking different classes.
Nice. You mentioned mentors and sort of organizations that you were involved in at UT. Are there any conversations that sort of stick out that sort of sparked your interest in, oh, hey, I actually want to do finance, or hey, there's money to be made here?
Yeah. So, there were a couple points, right? So I was lucky enough to join an organization called Texas Wranglers when I was my first semester at UT, and it's a brotherhood. It's a fraternity. It's not Greek affiliated, but a lot of the guys in there were majoring in business and McCombs, and by just talking with them, getting to know about the courses they were taking, what their interests were, their professional aspirations post UT, that started kind of shaping my interest more into business. I think I'd always kind of been entrepreneurial growing up without fully realizing exactly that I wanted to pursue a career in business from finance. And then another organization that was really pivotal for me was Sponsors for Educational Opportunity, SEO. And I happened to meet them. I want to say I met them during my sophomore, junior year on campus in I guess, chance way. So I am going to shout out a friend called Vivian Graves, who basically had done the program with SEO one summer before and thought I'd be a good fit for the program and recommended that I meet them at one of the career fairs that was going on campus. And I wasn't quite sure about it. I didn't know if I was even going to go to the career fair. I wasn't planning on it. And she was very adamant that I should stop by. I should come meet the recruiters. And I kind of said, all right, fine. I decided I was going to go. I wasn't even dressed appropriately, but just went after one of the class I just got out of, and ended up meeting one of the recruiters who ultimately, I would say, helped change the trajectory of my life by introducing me to this organization and basically mentoring me, helping me recruit for jobs in finance. At that point, I knew I was a little more tailored and wanting to become an investor and wanting to do something within finance.
Yeah.
Just wasn't really sure how I was going to make that happen.
Yeah.
And then they walked me through the entire process from start to finish, and have really been a major influence in my career trajectory, all the way up until now, to be honest.
That's awesome, man. So SEO is the name of the program.
Yeah, SEO, Sponsors for Educational Opportunity.
That's awesome, man. And big ups to you for answering the call, right? Opportunities come by people all the time, and just because they're new opportunities, people are a bit hesitant. But big ups to you for answering that. Yeah, that's awesome, bro.
Appreciate it.
So knowing what you know now about your journey, is there anything that you wish you talked about more growing up, or do you feel like you were adequately prepared just through conversations with your mom who went to UT and through your high school and your community? Did you feel like you were adequately prepared for the pivot after undergrad?
Yeah. So yes and no. I'll say my mom went to UT and she majored in sociology. She ultimately worked as a licensed professional counselor for her career. And so nothing related to business, nothing related to like any of the, I guess, majors I was potentially considering. And my parents never forced anything on me, which I appreciate now a lot. They always just encouraged me to go to college and to pick a field that I was passionate about to study and go from there. So I never had any pressure to study something structured like medicine or law or accounting or anything. And I think that really helped me a lot. That allowed me to really explore and be open-minded and really think about what was important to me and where my interests and passions lied. I think looking back, there were definitely some times when I was recruiting for investment banking when it's very competitive, it's very stressful. It's very tough to break in, right? And I thought, man, it would have been nice to have had some guidance growing up to kind of tell me, hey, this field exists. This is what you can do to prepare yourself, because you're competing against the best of the best from all over the country. And even in some cases from people from different parts of the world trying to get these very competitive top tier jobs. And when you're going through it, I was like, man, you see people from all walks of life, and a lot of them, they were set up from a very young age to kind of go down this career path.
Yeah.
And I remember thinking, man, it's hard to compete against this when you're coming at this right now at 20, 21 years old, just figuring what this career path is for the first time, within the last few months. And so that was tough. But in hindsight, it all ended up working out. I'm very grateful and thankful for the support and organizations that I had. But yeah, had I known more about that growing up, I think it could have helped shape some of the things that would have helped with the recruitment process and potentially more competitive at the time. But I don't think I'd be where I am today had it not been for the ability to, I guess, freely explore different career paths, different alternatives, different majors, as well as just the encouragement from my parents to really to study something, anything, and go from there.
Yeah. Parents love and support.
Hey, I know that was a bar. Take 2 seconds, like the video, consider subscribing, share this with someone. Back to the content.
Nice. So knowing what you know now, do you feel like you were adequately prepared for the pivot after undergrad? And if not, what do you think was missing?
Yeah.
All right. That's actually a perfect segue. Talking about banking and getting into Barclays. You landed at Barclays after UT. What is investment banking, for one? And two, how was the recruiting process?
Yeah. So investment banking is client advisory services. You're providing financial advice to corporations and financial institutions, primarily working with them on anything M&A related, as well as capital market transactions, trying to raise capital, whether it be equity, debt, or some form of some combination in between. You can also work with them on very structured, specific financial products such as derivatives. But primarily it's M&A and capital raising transactions that go on, at the upper echelons of business.
Yeah. Why do you think people are drawn to investment banking?
Yeah, I think traditionally people are drawn to it for compensation purposes. I think it pays very well. But also it's a really good starting point to launch your career.
Yeah.
Especially coming out of undergrad, MBA too. But when you're young and you're coming out of undergrad, I think a lot of people are drawn to it because it's a competitive industry, it's prestigious, and it gives you a really good foundation and skill set to do a lot of different things within business, whether it be continuing your career in finance and moving into an investment role or moving into, you know, a path towards the C-suite at a large corporation. Yeah. There's really a lot of things you can pivot into outside of banking or after you've gotten a couple years of experience in it that I think it draws a lot of people. And so I would say it's mostly kind of the skill set, the transferable skill set you can get mixed with some of the exit opportunities. And then ultimately, I think also people are drawn to the compensation aspect of it, which is quite attractive and quite competitive.
Awesome. So it's like the skills, the money, and the exposure.
I think so. Yeah, that's a good way to sum it up.
What was like your recruiting journey like at UT to get to Barclays? And like just in general, is UT more of like a cutthroat place? Is it more collaborative?
Yeah, for me, when I was there, I felt that it was very collaborative for the most part. Yeah. You know, I think when I look back at my time at UT, it was some of the best years of my life. Met a lot of amazing people, had a lot of great experiences, had a ton of fun, learned a lot also. And as I was recruiting, you know, especially when you're looking for careers in business and finance in particular. So a lot of that is done through the Macomb School of Business, which I was fortunate enough to be admitted into, transferred into it, I think, after my second year at UT, once I discovered my passion for finance and wanting to actually major in it. So that was great. And I think they have great resources, a ton of support. I would say overall, like, it's a competitive student body in the sense that people are trying to break into competitive industries. They're trying to get good grades. Some people have their eyes set on grad school. And so they're trying to maintain their GPA. But in terms of recruiting, I did feel like it was, you know, collaborative in the sense, at least my experience was, where I felt like I could go through this with a group of peers, and ask questions. I could lean on faculty. I could lean on some of the professors. That we had great student clubs that would help prep us. My particular experience was using some of those resources, but also really leaning heavily on SEO, who I told you I met at a career fair. They're the ones that really helped supercharge my recruitment efforts, help prep me, help make the right introductions, and were just in my corner the entire time. So I can't speak highly enough about them because they had such a positive influence on my life, my career, and where I am today. But there's a lot of resources. And so I think it's really just a matter of trying to learn how to use those resources effectively and figuring out what works for you. Yeah,
that's awesome. Your journey to Barclays, like the recruiting process, like how many interviews did you have to go through? Do you remember that?
Yeah. So I did take kind of a winding road to get to Barclays investment banking. So as I mentioned, I knew I wanted to be an investor. I didn't know what type of investing I wanted to do. Okay. And so my first internship in college was actually at JP Morgan Asset Management, which I was lucky enough to acquire through the SEO career program. And it was in New York City. I got great exposure to all different types of investment strategies, worked with some amazing people. Obviously, JP Morgan's a great firm, great brand name. But during that summer, I learned that the type of investing that I was most interested in was private equity investing. It just felt like exactly what I was looking for: deep fundamental analysis, working with businesses, longer holds, actually, you know, working with executive teams, just everything that I guess I was initially interested in. I found in private equity without really knowing that that's what I was looking for. Okay. Now, private equity is a hot spot, and a lot of people are trying to break into it. And again, this was happening over 10 years ago. So my first internship was in 2012. And now it's 2025. So 13 years ago. Obviously, a lot of people know about private equity now. It's become much more mainstream. Back at that time, it was still not such a talked about industry. Right. And so it was truly more organic the way I discovered it. But anyway, once I knew that that's ultimately where I was trying to go with my career, the main path to break into private equity was always trying to do investment banking. Got you. Right. And so I knew that if I was going to try to go down that route, investment banking was the best way to do that. And so coming back to UT in the fall, focused my efforts on trying to land an investment banking internship.
Gotcha.
And so during that process is when I went through the whole investment banking recruitment process, which was on-campus recruiting at the time through the Macomb School of Business at UT, as well as, again, re-engaging with SEO, letting them know that this is something I was interested in. Their career program had, at the time, programs with asset management, investment banking, sales and trading, all different types of finance verticals within the financial services industry. And so re-engaged with the investment banking professionals, their team at SEO, to prep for that process. I mean, I had a ton of conversations, a ton of coffee chats, a ton of networking with firms themselves, with people in the industry, with peers, people, classmates that were a year or two ahead of me. Probably had, I don't know, 30 plus different interviews, some multiple interviews with the same firms. And then ultimately the way I ended up at Barclays Investment Banking was, at the time, SEO Career would basically interview you, and if they offered you a spot, they would offer you a spot into that program and then place you at one of their partner firms. So I was recruiting directly with investment banks, but also recruiting with SEO Career. Got a couple offers from banks directly, but also got an offer to participate in the SEO Career program. This would have been for the summer of 2013. Ultimately, given the experience that I had and the relationships I had formed with that community, felt like that was going to be a great fit for me in terms of the internship. But the caveat was, when you'd accepted an offer with SEO Career, you didn't accept an offer directly with a firm, but rather you accepted an offer to join their program, which comes with benefits such as training, mentorship, coaching, etc. But then they would place you directly at a partner firm. So they ended up placing me at Barclays for that summer internship, which was a great fit for me. And ultimately, I ended up going back full time. But that's a long-winded way of saying that I was doing a lot of different types of recruiting at that point in time. Some directly with investment banks. Obviously, like recruiting from UT Austin, there's a lot of conversations you have with the Houston offices as it comes to investment banking. But I was focused on New York because I really enjoyed my first summer internship out there. Felt like that was the epicenter of the financial services industry, and also wasn't completely sure at that point in time that I wanted to focus exclusively on oil and gas, which is generally what the Houston offices do. Or I should say energy in general, not just oil and gas, but the whole energy sector. And so, I was coming at it from a lot of different angles.
You were hustling. You were hustling, man. Man, big shout out to Macombs and SEO. Wow. Is there a barrier to entry to SEO? Is it just like application, or like is there a fee associated?
So there's not a fee, at least. And again, this is when I was going through it.
Time adjusted.
I'm pretty sure there's still not a fee. I would say the barriers to entry for at least when it comes to SEO to applying are pretty low. Like, they want to work with people who fit their mission. Right. And they're willing to work with you. They're willing to coach you, to mentor you, to train you. The program has evolved over time. Even when I was working in finance, it had underwent changes to the structure of it. But in terms of applying, it's relatively low barriers to entry. There's not a fee, and anyone can go to the website, check out the programs they offer, apply directly to them. And I think, quite frankly, you can, if you're interested, you can talk to somebody in whatever field you're trying to pursue within their program. And you can actually get in touch with someone quite easily.
That's awesome.
So I think it's relatively low barriers to entry there.
That's awesome, bro. That's awesome. So you went to 6th Street a lot, I'm assuming.
Yes, we went to 6th Street a lot when we were upperclassmen at UT.
Any particular football game you remember that was like your favorite experience?
Man, okay, so here
we go.
I started at UT fall 2009, which was Cole McCoy's senior year. And that season, I believe we went undefeated in the regular season. We went to the national championship and played against Alabama. Ultimately lost. That was the year Cole McCoy got hurt.
Right.
So that entire freshman year was incredible because we were dominating a lot of the opponents we were playing, and we had just won the national championship 4 years earlier in 2005 with Vince Young. And so we had a very strong program, and there was a ton of excitement around potentially winning another national championship that year. So that year was great. Unfortunately, the rest of my time at UT, we were not very good.
I fell off pretty hard.
We had some pretty bad seasons relative for UT standards.
Yeah.
Where we were losing a lot of games we should have won. We were losing to schools with, I guess, not the same level of pedigree in terms of football that UT carries. And so sophomore through senior year was a lot of frustration when it comes to UT football. But I would say that was definitely just part of the story. I think honestly, one of my favorite social experiences and traditions that UT has is just the football program and tailgating. So we had so much fun. Throughout football season, all 4 years.
That's awesome, bro.
So in terms of a particular game, one of the first games I went to at UT as a student was freshman year. Might have been the first home game. I think we played UTEP, and we won like 70-7 or something. And so like just being in an atmosphere like that when everybody had title aspirations, dominating first game of the year. Tailgating before the game, going to the game with all the energy and excitement, like that's pretty good. I think also when I was there, we were still doing the rivalry with A&M, which has recently been renewed, which I'm super excited about.
Right.
But we would play them the Friday after Thanksgiving, so those games were always fun.
Yeah.
We'd rotate between College Station and Austin.
Yeah.
And whenever we played at home, those were great games. And then OU, the Red River rivalry.
Oh my God.
Every year, Red River. Those games were wild.
Oh.
Yeah.
Yeah, man.
Yeah.
All right, back to Barclays. Yeah. So what was like a day in your life at Barclays, and what skills did you acquire while you were there?
Yeah. Classic questions. So day in the life at Barclays, the classic response from an investment banking analyst is that it will depend.
Okay.
Right. You work very long days. And again, I was doing investment banking full time from 2014 to 2017. So the industry is always evolving, and there's been a lot of efforts to try to improve work-life balance within investment banking. But when I was there, the norm was 80 to 100-hour weeks. And so we'd be working long hours, most of the time 6 or 7 days a week. And a lot of it was what you hear about is, you're doing a ton of financial modeling, you're putting together presentations for potential transactions, you're working on live deals, and you're doing all of that, right? And I think a lot of your day depends on what you're doing, whether you're on a live deal or you're working on pitch books or you're doing administrative stuff, right? But generally, the role of investment banking analyst is to run all the financial analysis, collect the data, analyze the financial statements, pull information from databases, but also do a lot of the more unglamorous things in investment banking, put together a ton of presentations, do a ton of formatting in PowerPoint, where you get really good at formatting logos and, making sure the presentations look absolutely pristine. You'll do a lot of administrative work as well, setting up calls, tracking processes, taking notes, just a lot of admin work that you don't expect, that is not what they're selling you on when you go into it, but is pretty typical, I would say, for competitive professions, as well as typical for everybody that's starting off in New York City, trying to, make a name for themselves in a particular industry. So you're doing everything. And I think that's what contributes to the long hours. But what the type of work most people are drawn to when they accept a job in investment banking would probably be the financial modeling and analysis, because that's pretty substantial and it's pretty useful for a lot of different career paths within business.
Right.
Yeah. And if you want more like tangible stuff on day in the life, like there's a lot of times when you have days and you're just on calls all the time, and you're just like, especially when you're on a live deal, you can be on 8 to 10 calls, internal calls, external calls with investors, with different teams within the bank, just trying to figure out next steps of the process, craft the story. And so sometimes I remember there were days when I'd have, 8 to 10 hours of calls, and I'd be taking notes all day, and I'd be in between notes in the data room. And it's just not the most glamorous stuff, but stuff that you do as an investment banking analyst. But then there were other days when I was doing some really, really cool stuff that I really look back on still fondly, like 10 years later almost. And I'm like, how did some 22, 23-year-old kid get to do that? Especially like where I'm coming from. Like you have a lot of aha moments, and that's pretty cool too.
What was one of them, if you don't mind sharing? And you can keep it anonymous if you want.
Yeah. So I think I'll talk about my first deal that I got to work on at Barclays, which was an M&A sell side between two very prestigious private equity firms. Really cool company too, one that was in the healthcare space, but they were doing some really cool stuff that I found very interesting. And I think I got staffed onto that project maybe a couple of weeks after starting and saw everything from start to finish on that entire deal. And we're at the very end. I'd been working on this project probably about 5 or 6 months at this point. And it's a multi-billion-dollar deal, a multi-billion-dollar M&A deal. It's looking like it's getting very close to happening, and I'm in my MD's office, head of the group, and he pulls me in along with the full deal team. I'm, obviously the most junior person on the team. It's not just me and him, but we're in there and we're talking with, a very senior partner at a very prestigious private equity firm about terms on this deal, and getting to see like these two masters negotiate an M&A deal that's multi-billion dollars that you've been working on, and all the details intricately, and seeing how they negotiate and how they approach certain terms, and you're hearing big dollar amounts being thrown around, and it's kind of felt like it's out of a movie. And you're in this fancy New York skyscraper, and this big corner office, head of the group talking with senior partner on the counterparty, and it's just like, man, this is a pretty surreal aha moment, and you're just engrossed trying to take it all in, trying to learn as much as possible, but also just kind of a little starstruck while you're going through it. And ultimately we closed that deal, got it signed, and it was great. I remember there were a ton of late nights, long weeks, and you feel exhausted. And then at the same time, the competitor in you was like, man, I'm exhausted, but that was cool. I want to keep learning. I want to do another one. I want to get back out there. And M&A is awesome. And that really kind of sparked, or I guess validated a lot of the next steps I took in my career and helped take me to where I am today. Yeah.
And it's interesting. You talk about the long hours and sort of the gritty work that you were doing, but you're in your early 20s. You have the energy for that, right? And if you don't mind me asking, how much money were you making during that time? And obviously we'll have to adjust for inflation now, but
again, I'll say I started in investment banking first year out of college in 2014. And at that point, the market for first year investment banking analysts, total compensation between salary and bonus was probably around 120 to 150,000 all in for the first year out of college, which was pretty amazing. Yeah. Pretty much. It's almost like double what other great college jobs were paying, or other great jobs were paying first year out of college. And so you're making a ton of money. Again, this is like 10 years ago. So adjusted for inflation, it's probably significantly
it's higher for sure,
right? And I think part of the draw was, again, people were going into investment banking a lot of people to eventually transition into private equity or hedge funds. And at the time, again, 2014, 2015, the biggest private equity firms in New York City were paying their first year private equity associates, which was traditionally you would do 2 years in investment banking right out of undergrad and then transition 2 to 3 years and then transition into private equity. Yeah. The mega funds at the time were paying about $300K all in.
Out of undergrad?
Out of undergrad, yeah. So, but you wouldn't get the job right out of undergrad. The process was set up where you would do 2 to 3 years, either traditionally in investment banking or consulting, some aspects of consulting that were around due diligence and M&A advisory, and then transition into private equity. So you're looking like 3rd to 4th year out of undergrad, potentially making, $300K all in, split between salary and bonus, right? And that's on the higher end of the range in terms of private equity industry. And again, about 10 years ago, things have changed, but that's really good money for a lot of people. Pretty much for everybody.
I'm about to say, bro, that's good money for everybody.
Yeah.
Right.
Yeah. But it's a struggle. It's super competitive. It's a grind. A lot of very qualified people going for these jobs. And you really have to find a way to hustle and differentiate yourself.
Yeah. So you're over 10 years out from that experience. Yeah. Was it worth it?
Absolutely. Without a doubt.
There we go.
Yeah. I mean, I knew exactly coming out of undergrad that that's what I wanted to do. I wanted to get my experience in New York. If you can make it there, you can make it anywhere. Wanted to really go deep into finance. I was very interested in finance and investing as a field overall. Like I said, I knew that I was very interested in private equity investing, but I went into investment banking saying, hey, look, I'm very interested in investment banking as well. Like I double majored in finance and economics in undergrad, took a lot of the classes around corporate finance, some valuation. And so a lot of the stuff that would prepare you for, a full-time job in investment banking, there was still a lot for me to learn. But rather than like the traditional investment banking analyst that was like, I'm only doing investment banking right now at this time to break into private equity. That was a goal, but I was open-minded to seeing if investment banking was going to really be, a path that maybe that's what I was going to pursue instead of private equity. Ultimately ended up going the private equity route. And I don't regret it. I loved my time in private equity. I also really enjoyed the skills that I learned in investment banking. And I think that's what made it possible. But yeah, I mean, it was a grind.
That's good, bro. Yeah. It's good. I'm glad you think it was worth it. Yeah.
Right now. I mean, I can say that comfortably right now.
Yeah.
Many years out of banking and private equity. At the time, you definitely have some late nights, some long weeks, some long months when you're questioning your decisions. Like, why did I do this? What am I doing here? I'm really running on fumes right now. And is it worth it? Right. And I think in an industry as competitive as finance and investment banking in New York City, like, that's pretty common. A lot of people have these type of moments and they're questioning some of their decisions. Now, the further you get away from it and the more you can kind of start to see the benefits of doing something like that, I think most people would tell you, yeah, it was totally worth it.
Facts.
But in the moment, it's tough. It's definitely a very challenging obstacle you have to overcome.
Yeah. Let's double tap into private equity, specifically your pivot from investment banking to private equity. Let's unpack that. How was that pivot? What did you have to do to make the transition? And then sort of compare your time in investment banking and private equity. So let's start with the pivot.
I'll start off again by shouting out SEO because
SEO. Make sure they sponsor you, man.
Nah, man.
Or sponsor us.
They definitely played a huge role in my career. They have a program called the Alternative Investments Fellowship Program, which helps investment banking analysts transition from investment banking into private equity. So I was fortunate enough to participate in the program. Again, you have to apply. It's very competitive, and they have limited amount of spots. But if you get in, they basically help coach you, mentor you, train you to prepare yourself for private equity recruiting, which is very intense. And happens very quickly, at least historically. They basically, the way it would work for a lot of the traditional big private equity funds is at some point when I was going through, it was in the spring. So sometime between, February to April, one big private equity firm would decide, hey, we're going to kick off private equity recruiting for incoming first year associates. And we're going to just start interviewing investment banking analysts. And that would basically create a firestorm throughout the entire industry where everyone would say, okay, we're going to start recruiting right now. And so people would just hop on it. And so it was like there wasn't a structured date or application process. It was just whenever one firm decided they were going to start interviewing, the rest of the industry followed suit. And it got very chaotic. And it only lasted generally like 1 or 2 weeks before a lot of the top firms had already given out offers. And so SEO kind of helps prepare you for that process. You got exposure to top tier private equity firms, very valuable, I would say panels with senior private equity professionals. You got a mentor, you got a senior mentor, a junior mentor, you got training materials. They basically did everything to kind of supercharge your recruiting process and set you up for the best possible outcome. So shout out to them. Thanks for letting me participate in that program. Thanks for believing in me. But that really was kind of my rocket fuel that helped me really go through this industry. Which again, it's tough because it's tough to break into investment banking. It's also incredibly tough, maybe even arguably more challenging to break into private equity.
Yeah.
And so you come from undergrad, you just went through this rigorous process to break into investment banking. You're working really long hours, you're exhausted, and now you're going through the ringer again, trying to break into private equity. And so I think just having an ally on your side was really helpful for me, someone who believed in me, and helped me get from point A to point B. They were very pivotal for me.
That's awesome, man. Shout out to SEO, man.
Shout out to SEO.
So what was the difference between your time in investment banking and private equity? Like, what did your days look like? And like, what are some of the skills you learned in private equity?
So there's a lot of overlap between investment banking and private equity, but there's also differences, right? The main difference is in investment banking, you are a third-party advisor. You are advising clients on different capital market or M&A transactions, right? So you don't have skin in the game in the sense that you don't live with the deal after it gets done. Obviously, you're trying to do the best job you can. You have a responsibility to do what's best by your client, right? And get them the best outcome, but you're not there day in and day out once the transaction closes. So it's very transactional and it's very focused on client advisory, right? And in private equity, you're doing M&A deals, which is you do M&A deals in investment banking, but you're on the advisory side. Private equity, you are investing in these companies. So you're buying and selling companies. When you buy it, you live with the transaction. So you have ownership, or the firm has ownership of the company, typically about 4 to 5 years, with the intention of, improving operations, growing the business, and then selling it at some point in the future to realize a return on your investment. And so a lot of what you do in private equity revolves around buying and selling companies, but also portfolio management, improving the operations, executing value creation initiatives, trying to make these businesses better, more valuable. Overall, where not to say you don't do that in investment banking, but the focus in investment banking is on client advisory services, doing what's best by the client, helping them solve whatever problem they need to resolve in that moment. And in private equity, you have a very clear strategy. It's an investment strategy. You raise a fund, you raise a fund to invest in attractive companies, and then you try to sell them at a higher price, realizing a return on your investment. At the same time, hopefully making the companies better, creating more jobs, doing all sorts of great stewardship practices while you own these businesses. But the goal is around investing, whereas in investment banking, the goal is transactionally oriented and doing what's best by your client.
So what skills did you learn in private equity?
Yeah, in private equity, so you really build upon a lot of the skills, or I built upon a lot of the skills I learned in investment banking. There's a ton of financial modeling. There's a ton of financial statement analysis, accounting. There's a ton of deal execution, due diligence. You learn a lot of that. You learn how to manage a process, how to work with third-party advisors. But I think one thing that you learn in private equity more, at least I learned more so than I did in investment banking, is you really learn how to work with the companies themselves. So when you're in private equity, you're working a lot with your portfolio companies, and the private equity firm is involved at the board level. There's a executive management team that runs the business, and then they have their full team of employees that actually work at the business and perform operations on a daily basis. At the PE level, you're really involved at the board, and you're working closely with the management team. And so learning how to do that, how to motivate management teams, how to get information from them, how to come up with ideas, implement and execute these value creation initiatives that we're trying to do within the private equity firm to make these businesses better and to, ultimately lead to a better outcome for all parties involved. You learn that, which is you spend a lot more time thinking about that than you do in investment banking. In investment banking, you'll propose ideas in terms of, this business should be doing X, Y, Z, and this, ABC could be a potential growth opportunity or could be potentially financially attractive for them. You propose these ideas, but you don't actually execute and implement them. In private equity, you are the owner of the business, trying to actually create value with these businesses.
So it sounds like from the private equity side, you tap into a lot of EQ as well, right? And like emotional intelligence, soft skills, if you will.
Yeah.
Whereas like investment banking, not that soft skills aren't required, but you are a grinder.
I think
right?
I think in both fields, as you progress, the EQ and the soft skills become more important, right? So I think it's important to note that when I was in investment banking, I was an investment banking analyst, which is entry level position coming out of undergrad, and then in private equity, I got a promotion to be an associate, which again, if you continued in banking, you'd be analyst, associate, and then continue climbing up the ranks. And each time you progress in each of those fields, you take on a different role within the team, and you get new types of responsibilities.
Yeah.
And so some of it is, yes, there's some differences between private equity and investment banking, but another portion of it is I was in a different role with different types of responsibilities.
Gotcha.
And I think that even in investment banking, the most senior role is typically called managing director. That's very EQ heavy role in the sense that you're working a lot with clients, you're talking with them, you're traveling a lot, you're proposing ideas, you're working with them as a partner, right? So I think you do need to have a lot of EQ in both. On the private equity side, as you progress, the most senior positions typically called partner. Yeah. And again, you're chasing a lot of deals, you're proposing a lot of different types of transactions, and you're working very closely with the management team from the board level.
Yeah.
And I think, again, the communication, the working with people, the learning how to motivate, it's very important in that role.
Yeah. Man, I hear this term carry
when
we talk about compensation in private equity that you don't get in investment banking.
Yeah.
What is carry?
Carry is just a term for basically equity ownership.
Gotcha.
So when you talk about carry in private equity, it means that you have a stake or a claim to some of the returns if they are realized in the fund.
Okay.
Right. And this is typically given after the first role in private equity. So not at the associate level, but generally as you progress through the fund.
Okay.
With most of the carry going to the partners of the private equity firm. So basically, if a private equity firm raises a fund, they deploy the capital, they make investments, and then upon selling those investments and getting a return on the initial investments they made, when the whole fund is said and done, they will then have profits, and they will divide those profits according to a waterfall or carry schedule. And you, as the private equity professional, your carry would be a portion of those profits that the fund made.
So that's where people get like a real bag in private equity.
Yeah, you can make some serious money off of the carry in private equity.
Nice. So after private equity, you went to Clinicos, which is a firm not even in this country, right?
That's right. Yeah. So Clinicos is a healthcare services company that operates in Colombia, exclusively within the country of Colombia.
Okay.
Yeah.
Okay. So did you always want to pivot out of private equity? Normally people want to stay in private equity and either go build their own thing. And by the way, you did all of this before business school, which we'll talk about in a second, but sort of talk about your pivot to Clinicos and why.
Yeah. So I actually thought that once I got into private equity, I would want to stay in private equity for the rest of my career.
Yeah.
So this was not something that was planned or premeditated going into my PE job. But as I was working in private equity, I realized that I really enjoyed a lot of the operational aspects of the business as much as I enjoyed finance, the finance side, the deal side, the investing, like all that was great.
Yeah.
But I liked working with the management teams at our portfolio companies.
Yeah.
I liked digging deeper into the operations, and I liked the people aspect of it. And so I guess I ended up pivoting into this role because I felt like I had gotten really good financial experience for the past 5 years working in investment banking and private equity, but I wanted to, I guess, look under the hood of an actual company, work at the company itself, and see what it was like on a day-to-day basis to be at a company, to be working with the management team directly. And so I was looking for opportunities that fit that mold. The other thing that I was looking for specifically was I'd kind of in the second year of my private equity internship, during the second year of my private equity job, I was debating between applying to business school or doing something a little more operationally focused or entrepreneurial entrepreneurial by nature.
Mm-hmm.
And as I was reflecting, I originally was like, okay, I'm going to go down this business school path, but I thought, hey, I think there's some other things within business that I want to try before business school. I had recently been exposed at that point to the idea of a search fund, to ETA. I thought something in that space could be interesting.
Yeah.
But also I had actually studied abroad in Argentina during undergrad and really enjoyed my time in Latin America and thought, okay, I think I want to get some experience working abroad at some, in some country in Latin America at some point. And so I decided, or I guess after reflecting, I realized, okay, I think this is a good time to kind of make that move.
Yeah.
And so why not try to look for an operational or entrepreneurial role in Latin America at the same time. And so that's what I was doing. And I probably had, I don't know, maybe 70, 75 different conversations with different people in different countries across Latin America, Mexico, Colombia, Peru, Argentina, the list goes on about potential roles that I was trying to find. I was basically trying to create my own role.
Yeah.
Like there wasn't a job posting or there wasn't a headhunter out there that was going to place me into a role. I was like, okay, this is what I'm looking for.
Yeah.
And I want to do this for maybe 1 to 2 years and then eventually apply to business school, come back to the US and basically continue my career here. But this is what I'm focused on now. So it was very unique. It was a path that very few people, if not, I don't know, anybody had done it before, at least in that particular manner. Because, you spend the last 5 or 6 years recruiting to try to break into Wall Street, right? Mm-hmm. Most people, they have the intention of spending their career there. And so it wasn't very common to, once you break into private equity, to leave financial services. I did work with some people who went from private equity to hedge funds or went to another area within the financial services industry. It's very common to move from one PE firm to another firm, especially after doing a couple of years at your first PE job, but not so common to move, to Latin America into a very different, non-financial role. So that was kind of the path less traveled.
Wow. You sort of reached the finance pinnacle, if you will, right? After undergrad, going from investment banking, then to private equity at a great firm, right? And then leaving to sort of do your own or like create your own space. And then you go back to school. Like, when did you first hear about business school and why did you decide to go to business school? Sort of talk about that.
Yeah, I first heard about business school. I guess I had heard of MBA, as a kid growing up, but wasn't really super familiar with the nuances of it. But I think really the way we talk about business school, I first started hearing about it during my first internship at JP Morgan Asset Management in New York City between my junior and senior year. I had some mentors that had gone to business school or were currently going to business school, as well as some of the other people that I was working with at the firm had considered business school. It's just a topic that I started to hear a lot about when I was working in financial services. Because again, at that point in time, business school was still a very common path for a lot of people in the investment industry. Right now, I think it's still a common path, but there's definitely, it's not a necessity to continue to advance to senior roles within private equity or other investing roles. Whereas in the past, it was very common that most people would come back, get an MBA, and then continue their career there. And so I think the first time was really as I started recruiting heavily for private equity and had my first internship. It was just a question that, my peers would talk about, like, hey, are you thinking about an MBA? And then you would ask people that were a few years ahead of you, or maybe your bosses would ask, hey, are you considering getting an MBA, after a couple years of experience here? And so it's something that really kind of came to the forefront of the conversation at that point in time.
And during your application process, did you always want to go to Wharton? Was Wharton your number one school? And did you bump your head on the GMAT like the rest of us? How did that go?
Yeah. So, Wharton was definitely a school I was very interested in. Working in financial services in New York City, Wharton is incredibly well represented in terms of a lot of our alumni. They're working in those jobs. And so I would come across Wharton MBAs a lot in terms of investment banking or private equity. Basically all over Wall Street, there's a lot of Wharton MBAs. And so I was very familiar with the brand through that experience in my life. And it was a school I was very interested in. The GMAT was very challenging for me. I think a lot
even as a finance guy, the GMAT was challenging.
Yeah, the GMAT was hard. It was it required a lot of time. And I think even, as a finance guy, someone who I consider myself to be pretty quantitative and analytical, you had to really study and buckle down to get the score you wanted on the GMAT.
Yeah.
And I know that was pretty common for a lot of people. I did a program called Management Leadership for Tomorrow, MLT.
Yeah, you did.
Yeah. And so I know that program's great. And there was maybe a class of 200 or 300 of us that were going through the program together with the goal of enrolling into business school.
Yeah.
And so a lot of us, we had a community of people to talk to and basically share best practices with, but also, share our grievances with, oh man, I'm frustrated with this test. My score's still not where I want it to be.
Yeah.
And so, I think for a lot of people going through MLT, a common theme I noticed, and I think just in general for grad school, is a lot of people, even a lot of very smart people, the GMAT or the GRE, it takes time, right? And, at this point, most people have been out of school for a few years and learning how to take a test again, and buckling down when you have a full-time job, a very demanding full-time job. It's hard for people, right? And so I think that's one of the harder steps in the whole MBA process is just getting that test out of the way.
Yeah.
So it's challenging.
Absolutely. I think, we could talk about Target Test Prep. We could talk about Magoosh. We could talk about all of these other programs that help you with the GMAT. But if I did not have community and accountability, I wouldn't be here right now. Yeah. So I'm glad you mentioned community.
Community is very important.
Right. It is, for sure. It's important for everything. I mean, even throughout your journey, you mentioned SEO multiple times. That's community. That's accountability. We can't do this thing alone, especially when we weren't really given the tools or given the exposure to know exactly what route to go. Yeah. So community is definitely a vessel, a staple here, if you will.
Yeah, I agree.
So question for you. So you're on the other side of Wharton now. You're an alum, graduated last week.
Yeah, congratulations
classmate.
To you as well.
Man, I appreciate it. Yeah. I appreciate that. Yeah. What have you changed your mind on since going through Wharton?
Oof. Yeah, so that's an interesting question because I came into Wharton a little bit above the average age. So I'd done a lot of things pre-MBA we talked about, right? I did banking, private equity, and a lot of different things within a search fund owned company in Columbia. So you can talk about that experience in a lot of different facets. I came in knowing that I wanted to do something entrepreneurial. I came in with a pretty firm idea that I thought search funds and ETA would be the route that I would go. Mm-hmm. But I knew there were other avenues within entrepreneurship, and I wanted to take the time at Wharton to explore those other avenues, potentially starting my own business, looking at venture capital, which is similar to private equity, but different. Mm-hmm. And maybe being a co-founder, maybe working at a startup. I really wanted to take the time to explore that. So I did a lot of that during my first year at Wharton. And then during the second year after my internship, coming back on campus, I was really reflecting and like, okay, well, the story hasn't changed. I still want to do entrepreneurship in some capacity, but I just felt more called. I felt more compelled to pursue something within the ETA space, and really spent a lot of my second year looking at the different models, the traditional search fund model, which I was really familiar with, coming into business school, given my role at Clinicos, but also the hybrid model, maybe a self-funded search. And I would say like the full circle moment is here we are at graduation. And I think, ETA is still what I'm going to be pursuing. And, I think traditional search is the right route for me. And that's where I'm at. And so it was a bit of a lengthy process that I'm glad I took to make that decision, because it's a demanding field. And I think, it is less structured than a traditional post-MBA career path. So you really have to understand what you're getting yourself into. But I feel invigorated and excited for the next steps in my career now. Yeah.
I mean, ETA requires hustle, right? And hustle is all a part of your story from the beginning of this conversation to now. You find a lane and you go exploit that lane until you get what you want. So I would bet on you, bro.
I appreciate that.
For sure.
Yeah, I wouldn't say so much exploit. I would say, passionately, vigorously pursue my goals.
Yeah.
Yeah.
I like it. What is ETA? Just high level.
Yeah. So ETA stands for entrepreneurship through acquisition. It's a very popular space in the business school community right now that a lot of MBAs are exploring. Mm-hmm. And essentially what it entails is either raising some money from investors or using personal resources to go and acquire a small business after graduating from your MBA program.
Yeah.
You don't have to go to the MBA program to do ETA, but it's a very common route for people who go into this space is to get their MBA and then upon graduating, go look for a small business to buy with the intention of operating it usually as a CEO after you close the investment. And some people, depending on the strategy, want to operate it for life. Other people are have a more investment oriented approach where they want to operate it, for a few years and then sell it eventually and realize a return on that investment. But ETA is the goal of trying to be an entrepreneur by buying a small business that already exists.
Okay. That's awesome. And what's the upside of ETA as a vehicle for entrepreneurship?
The upside is when you buy the business, and it depends on how you structure the transaction and which route you ultimately pursue, but you will get an equity stake in the business, right? Yeah. In some instances, on the extreme side, if you decide to pursue a self-funded search and you have the capital to buy the business yourself, you can end up with as much as 100% ownership in the small business, meaning that if you were to sell the company, any profits or gains you've realized on that investment would flow to you. Yeah. Right. So that's can potentially be incredibly financially attractive. Now that's an extreme example. Most people don't go in with 100% ownership. And particularly if you're pursuing what's called the traditional search fund route, you're not going to end up with 100% ownership because you will go in with investors who partner with you, and they will take a portion of the equity ownership as well.
Mm-hmm. Now, what are some of the risks?
I think the risks with ETA, and it depends on which route you pursue, right? One of the first risks is you go down this path looking to buy a small business, and you ultimately can't find one to buy for whatever reason. You can't. You can't find an industry you like. You can't convince a seller within an industry that you do like to sell you the business. You can't agree on terms. There's a whole host of reasons why you may not be able to actually close a transaction and buy a small business. That's one of the risks. I think arguably a bigger risk is you do buy a business, but you buy a business and it doesn't go well. And by that meaning you lose some or all of the investment that you made into this business. And the extreme example is you buy a company and you lose all your money, all the money that you put in, because the company becomes less valuable than it was at the time of the transaction. Right. Wow. And so that's a risk. But again, those are two extreme examples, where most people, this has been a model that works very well. And I think if you go in with the right mindset, the right skill set, and the right support and resources, you're set up pretty well to mitigate some of those risks and have a successful outcome with varying degrees of, of success, especially financial success.
Yeah, that's awesome, man. All right, Marc, we're going to wrap up with our anchor question, man. What is one piece of advice that you want to leave people here?
Yeah, what I would say is believe in yourself. Mm-hmm. Don't let imposter syndrome kick in. I know that's, a big thing that gets thrown around a lot in a lot of different communities. But you deserve to be where you are. Don't let your dreams scare you. Yeah. I mean, anything, if your dreams don't scare you, they're probably not big enough, right? Yeah. So you got to pursue them vigorously, be resourceful, build a community, find your community, and realize that, people are out there, they want to help you. Yeah. And so if you can find a mentor, find a coach, definitely take advantage of that. But realize that we all belong here. You belong here. And if this is something you want to do, anything I talked about, investment banking, private equity, ETA, whatever the case may be, getting an MBA, pursue that. Yeah. Find a way to make that happen. Find people to coach you, to be your mentor, and believe in you.
Man, that fires me up. Marc, I appreciate it, man.
Hey, anytime, man. Thanks for having me.
Thank you.
Yeah.